BBAI is one of the more controversial stocks in the market right now. Because when you look at the people that are bearish on the stock, they'll point to things such as how they increased their authorized shares recently in the annual shareholder meeting, and that raises dilution concerns. They believe management still has a lot to prove and that they need to execute. You'll hear people talk about how they feel as if they're losing too much money and that government contracts are too slow and not even too slow, but also can be very unpredictable. But then when you flip it over to the other side, the bulls, they argue regarding how they have grown their backlog. They like to look at the future opportunities regarding the Ask Sage acquisition and everything regarding national defense, artificial intelligence, and also don't forget about the improving gross margins for BBAI and their much stronger balance sheet. So personally, after looking at both sides, I still lean more bullish. And do I think that that makes BBAI a risk-free investment? Absolutely not. That's not what I'm saying. This is still a speculative smaller cap company with real execution risks. The thing that I want you to realize is that I also think, because the market, it may be underestimating where this company could be several years from now if management continues executing. And I know that there's still lots of things that management has to improve. They have to prove, but still, they have done some good things recently. So today, I want to break down both the bullish and bearish arguments for the stock. And let's get to the video, guys. So again, my name's David here at InvestQ. Feel free to hit the like and subscribe button if you feel I added any value to your investing journey. And why the bulls, including myself, are still bullish on BBAI. So first and foremost, the first reason is because investors, it's regarding the market that they operate in, because unlike other AI companies chasing consumer applications, BBAI focuses heavily on national defense. They also focus on intelligence, homeland security, logistics, and mission critical government programs. And those contracts have high barriers to entry because of security clearances. And also, they require specialized expertise, and they also require long customer relationships. And many investors believe they believe companies already embedded inside the defense ecosystem have an advantage as governments continue investing in artificial intelligence. And BBAI is one of those companies that is embedded in the defense ecosystem and has connections. And the growing backlog, so just doing a quick Google search, BBAI growing backlog. So with that being said, the company's backlog that people are talking about, so regarding the backlog, again, right now, due to per the latest report from the recent quarterly that we had for BBAI's backlog has increased as much as 14% from the previous quarter to a staggering $282 million. And included in that backlog was a $53 million sole source intelligence contract. And the backlog, even though it's not revenue today, as we know what backlog means, it's just revenue that's on a longer time period from contracts that they've already been awarded. But say if it's a $200 million contract, the $200 million doesn't all come in right then and there. They get paid out on a longer time frame. So it's unrealized revenue, basically. And what this does show is it represents the contracted work that management is expecting to recognize. That's all that it is. It's just unrealized revenue in simple terms. And also, another reason that people are bullish on BBAI is regarding their margins, because BBAI's margins have improved and gross margins has expanded to approximately 34%, which is a significant improvement from the previous year. And management is starting to shift away from lower margin consulting work and more towards higher margin AI software. That's why we're seeing the expansion in margins that we have been seeing. And investors generally, what they like to see is software revenue become a larger percentage of total revenue because software businesses tend to scale much better over time. Now, that leads into another major part of the bullish thesis, and that's regarding SaaS, because historically, Big Bear AI has generated a large portion of its revenue from consulting services. And consulting services can be unpredictable and project based. Management's goal is to transition toward recurring software subscriptions through AI platforms. If it's successful, that could eventually create more predictable revenue, stronger margins, and a higher quality business model. And last but not least is regarding the Ask Sage acquisition, because Ask Sage is the company's generative AI platform designed for government organizations. Excuse me. And according to management, the platform already reaches thousands of government users across numerous agencies and is expected to generate meaningful recurring annual revenue. And if adoption continues expanding, many investors believe Ask Sage could become one of Big Bear AI's most valuable long-term assets. And the next point would be, I said that was the last thing, but there's two more things that I wanted to bring up. So for the bullish thesis, besides Ask Sage, the next thing I wanted to talk about was the balance sheet improvement. Because another thing that they're pointing to, because over the past year, management dramatically reduced its debt while significantly improving liquidity. As you do see right here, assets are increasing and liabilities are decreasing. And and their debt has been reduced, their assets are increasing, and their liabilities are decreasing. All good things for the company. And having a healthier balance sheet gives the company greater flexibility to invest in research and development, to pursue new opportunities, and navigate the timing of government contracts. Because as we've talked about in previous videos, comparing what I've said about Castellum CTM in the past, when they had that report that they said that they basically reduced their debt to absolutely nothing, to basically nothing at all. That showed that CTM is more in a position to not just worry about paying their employees and focusing on the day-to-day operations, and they're really cramped and trapped, and they're very trapped just thinking about how it is they can survive, but they've gone past that, and now, instead of just thinking about survival, now they're thinking about growing and ways to expand. Big Bear AI is basically in a similar position in that way, if that makes sense. And another thing would be regarding revenue guidance, because management also reaffirmed its full year revenue guidance of $135 million to $165 million for the year. And perhaps even more importantly, management expects revenue growth to accelerate during the second half of the year as additional customer deployments begin ramping up. And of course, guidance is simply management's expectations. Now they have to execute and they have to make it actually happen. So when you compare it to another company that's in the defense sector as well. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. That other company I'm talking about is none other than Palantir. Obviously, they're not direct competitors in size, as Big Bear AI is much smaller in scale and is a lot more riskier. But that is one of the reasons why investors view Big Bear AI as a very good asymmetric bet to the upside. Because even though Palantir is a much larger company with a lot more consistent profitability, stronger financials, and significantly more commercial business, if BBAI can execute well, even small improvements in their operations can have a much larger impact on the stock price because of its smaller size. And speaking about how it's an asymmetric bet to the upside, again, with that being said, the company has a small market cap, and especially when you compare it to the larger AI defense companies. So just one or two big contract wins, or a stronger than expected earnings beat, or a stronger than expected execution in any way can meaningfully change the sentiment for BBAI in a very, just very quickly. And the potential upside is why many investors are okay to tolerate the risk and have accepted the risk that comes with BBAI. Now, what do we always talk about on this channel? What do we never do? We never marry a stock. You always take the bull and the bear case in any stock you're looking to invest in. First thesis for the bears that are more pessimistic on BBAI is regarding revenue growth, because during the last quarter revenue, it actually declined about 1% year over year. And management attributed much of that weakness due to certain U.S. Army programs. And the bears argue that this shows that this company's core business hasn't yet reached a consistent growth trajectory. And they also point out the government procurement cycles can be slow, they can be unpredictable, and dependent on federal budgets. Now, the next concern is regarding profitability, because although margins have improved, the company still reported a significant GAAP net loss, and adjusted EBITDA also remained negative. And bears argue that until BBAI consistently generates positive earnings and cash flow, the company still has a lot to prove. Another concern is regarding operating expenses. Selling, general, and administrative expenses have increased substantially. And management says that much of that increase came from integrating acquisitions. It also came from investing in growth and expanding the business. And the bears, however, question whether those investments will ultimately produce enough revenue growth to justify the spending. And this one's probably the biggest debate. Honestly, probably should have led with this one, but it's regarding dilution concerns, because the company significantly reduced its debt, and I want to make this clear. It significantly reduced its debt by converting a large amount of convertible notes into equity. While that did strengthen the balance sheet, it also increased the numbers of shares outstanding. Because speaking of increasing the number of increasing shares, let's talk about how they approved the increase of the company's authorized shares from a staggering count from 500 million all the way to 1 billion shares. And it's important to understand, I say this all the time, that authorized shares are not the same as issued shares. So they have not issued the shares yet, and the approval does not mean that it doesn't automatically mean that dilution is going to be imminent right now. But it does give management the flexibility to issue the additional shares in the future if they decide to raise capital, fund acquisitions, or compensate employees. And some investors view that flexibility as beneficial, while others worry it creates the possibility of future dilution. Now, regarding the stock itself, looking at the bigger picture, BBAI has been under significant selling pressure over the past several months. The stock remains below key moving averages, and many technical traders would still describe the chart as being in a bearish trend. Some investors, they prefer waiting until momentum improves before buying. But where I stand with all of this is, personally, I understand both sides from the bull and bear case, because both sides do make valid points. The bears, they argue, they make legitimate claims or legitimate points regarding how revenue growth needs to improve, how profitability still isn't there, and how execution absolutely matters, and that the dilution concerns are also legit. But despite the concerns that the bears raise, I still remain bullish on the stock, and this is just my personal opinion, not financial advice, disclaimer there. The reason that I'm bullish is pretty simple, because I don't think investors are buying BBAI for what the company looks like today. They're investing based on what the business could become over the next 3 to 5 years. And if management successfully executes, and if they continue improving margins, and if the Ask Sage if Ask Sage continues gaining adoption, and if backlog converts into real revenue, and if the additional defense AI contracts continue coming in, and don't forget, if management successfully transitions towards higher margin recurring software revenue, I believe that the valuations of today could eventually look much more different than it does today. And even though none of that is guaranteed, this is still a speculative company with a lot of risk. I personally believe that this is an asymmetric upside bet, and I have accepted the risk that comes with BBAI, and I have done my due diligence. I have a specific amount of it of my capital allocated into BBAI in my portfolio, and I have done some. I do have my metrics as to when I would sell for a loss if my thesis was broken. So those are my personal thoughts. I'd love to hear what it is you guys think. What do you think about BBAI? Let me know in the comment section below. And also, if you do feel I added any value to your investing journey, please feel free to hit the like and subscribe button, as I do appreciate the support from you guys. But with that being said, stay safe, InvestQ out. See y'all in the next video.